The stock market has just opened after the Dow's worst day in nearly 2 years. The index closing down 3.6%. So let's bring in Maria Bartiromo, because understand from you, if you look at call for number one here, down 13.1% from January 1st for the Dow. And all of those trend lines obviously are not good. And how does this affect everyday Americans who, maybe they have a little bit of money in the stock market, they have a 401k, but the gas prices, the food prices, it's really starting to get very real for people out there.
It really is, Danny. Good morning to you. Look, nobody wants to see numbers like this, and so there's an impact on sentiment, and sometimes sentiment dictates the way you behave, whether or not you're going to spend money, whether you feel like you're in good financial shape or not. But you're right, 401ks, pension funds is another obvious impact. A lot of people are invested in the stock market, and they don't even realize it because their 401k, their retirement plan, their investments that they don't look at every day are obviously losing value. I think what's going on here is a realization that things are slowing down considerably, and we may very well be in a recession right now. And so if last year was a year of worrying about supply, this year is a year of worrying about demand. And what we've been talking about on Mornings with Maria over on Fox Business is demand destruction. What is demand destruction? It's when you go to the store and say, you know what, I want to buy XYZ today, and then you go and you get sticker shock, and you say, whoa, I didn't know it was that expensive. I'm not buying that right now. Right. We're seeing demand destruction as a result of inflation, and that's really what's going on. And I also wanted to point out that while we have the monthly CPI, the Consumer Price Index number, every month, and it's showing above 8%, the last reading was 8.3% inflation rate. That's an average, guys. Remember that. The stuff that we're actually buying is up much more than that. I've got a list here. I mean, when you look at things like fresh fish, up 13%, chicken, up 16.5%, ground beef, up 15%, the price of an airline ticket, up 33%. So sure, the CPI is showing an average of up 8.3%, but the stuff that we're actually buying every day is up much more than that, in the double digits, and that's what is called demand destruction. You start looking for alternatives.
Well done, Maria. Diesel's at an all-time high. Here's gasoline price today. You're paying $4.58 a gallon. A year ago, that was $3.04. That's such a big difference. And American spending on gas, last year the average was $2,800. In the month of May, they expect Americans to spend $5,000 annually. Call for number 4, guys. Advance it one time. $5,000 for an American family. I mean, look at those numbers. I think there were two things that stuck out at me, Maria. Target announced their earnings yesterday, and they got hammered. And the guidance they gave for the next 3 months was like, we don't see it getting better. And I mean, that was not a good sign. And then Janet Yellen dropped the big word. She used stagflationary effects. So you put all that together that I just explained right there, that's not a good forecast.
No, it's not. And Target got smashed on Wall Street. The stock was down about 27%. Imagine losing a third of your value in one day. That's exactly what happened with Target. And Target has been trying not to raise prices all that much. It's trying to watch to see what consumers are going to do and how they're going to react. Gasoline prices are a big problem and will continue to be a problem because we have not entered the peak driving season months yet. In fact, this morning, J.P. Morgan comes out and tells clients they expect a regular gallon of gasoline to hit $6 a gallon by the end of the summer in August. So we're in for some more pain when it comes to gasoline prices, and that's the underlying component here that's lifting so many other commodities, because you've got to drive the product to the stores, and the truckers are having issues. There aren't enough truckers, and they're paying sky-high prices for diesel, and of course somebody's got to be left holding the bag. Companies will eventually pass that on to consumers. So we're looking at some tough times. Janet Yellen used the word stagflation. Very easy definition here. Stagflation is just heightened inflation and lower economic growth. Pretty much exactly where we are right now. Something, by the way, Larry Summers was predicting and criticizing the administration's policies about.
A long time ago.
It's not where we want to be, for
sure.
sure.
Long time ago.
Maria, thank you so much. We appreciate it.
Thanks, Maria.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.